Dear friends, how have you been? It's been a while. Welcome back. This video is just a very quick review of something I saw on CatJPY a couple of minutes ago. Alright, so I'm just going to be reviewing this current price. Wouldn't take a long time, okay? There's no textbook diagram, it's just a weekly review. Alright, so without wasting much of our time, this video is brought to you by SloanFX Loan Academy. And this video is basically showing something on engineered liquidity. All right, engineered liquidity, internal liquidity, and structure. Okay, so let's just get down into it. Already we know our market structure, so we know that from here was the last break of structure to the downside. And we know this was the last low that caused this last break of structure, and you can see there is a tick or shift from that particular low, then it rebounds into this zone right here and continuation, signifying upward movement. All right, so already from higher time frame, we already know we are on an uptrend, current uptrend. Yeah, this was the previous price low, so we are just focusing on this particular move right here. All right, so let's mark out, let's do our markups, then and then look closely to where we are looking at. So right here is our FMS shift in market structure. Then we have a continuation of a breakout structure right here, and then same here. Okay, and then a little breakout structure still right above here. I really don't know, I'm not using my mouse today. Slow. Alright, so this is primarily our markup. Then since having marked out our breakout structure, let's mark out the inducements or the internal liquidities. Okay, so I'll take here as the inducements, and then I'll take here as an internal liquidity one, or anything you might want to call it, then another IRL. Okay, so now breakout other blocks. Picking this low here as the lowest order block, and then furthermore you can find out that there are little other blocks from inducements and stuffs. You can find another block here which the market took out. My basic focus right here is on engineered liquidity. All right, so let me not just confuse us with a lot of markups on the screen, so that I can be able to explain what I want to explain now. All right, so this is what the market created, a move right here. Then from here it started creating a reversal so that it can come down into our area value right here and then continue going up. Okay, so any counter trader must have taken this entry from here then into this zone. Okay, so basically now you see very many traders, when this trade now tapped into this zone right here, okay, into here, sorry, there is that arrow. The market comes back, taps into the other block from inducements here, makes it a little buy. A lot of people might enter this trade. It comes back, it reverses. That's number one, first engineered liquidity. All right, taking out this whole zone now as the first one, goes up again, clears the liquidity above here, then comes back, mitigating this particular zone right here, this particular order block right here. Right here is my particular emphasis, basically showing this now, this clear of liquidity. This showing this clear of liquidity. That is after the market has mitigated the first buyers from here, mitigated the second buyers right here, and then went up a bit. Now came and mitigated the third time, even a fourth time. Now anybody taking this entry now will clearly be liquidated a couple of times unless you're setting your stop loss below this target zone. Even if you're picking the 50% entry just like I do, you will still have a missed entry. I don't take my entry from above the other block, I take mine from 50%. So even if you're taking your entry from the 50% zone, you still have a missed entry. Oh, this trade is quite fair trade though. I didn't take it personally. I'm just studying and then I came across it. Alright. So usually now there is a lot of liquidity sweeps around this zone. Even from these internal liquidities, many people that probably took entries from here, eventually got cleared out because you see this one came to mitigate, went up a bit, came and cleared it off, mitigated, cleared it off again. So basically now there is a lot of liquidity taken from this particular move, and then you see when it got mitigated at this point, the next move was an impulsive one. All right, so there is this little correction down here. So retest into another zone right here. So basically now if I'm going to pick an entry, I'm just going to scale in into this trade, probably wait for an entry, then I can enter. I have my fair value gap here, which has been filled quite alright. Then I have my entry. I'll pick my entry slightly from here. Getting my entry at the 50%. Target first internal liquidity. And then stop loss slightly below. Basically, this is what I'm looking at. I'm going to still take this trade. But it's a quite interesting chart. Looking at it from perspective of engineered liquidity and a lot of liquidity sweeps. It's a very interesting chart. And I think basically what I'm trying to explain to you here is the internal liquidity and the structure. All right, so this is a very clear entry model. This is a very good model for taking trades. So if you're doing your research or if you're studying, then you come across this thing, just know that the next probable move is the one that is for liquidity. That is the one that is in line with the liquidity that the chart is showing you. All right, so I think this will be the end of this video. It's not going to be a long one. It's not supposed to be a long one. All right, so remember, if you've learned something, do well to leave us a like, comment, and subscribe. All right, share the video also to your friends, and let's learn more and make more. Thank you.